Welcome to another market briefing, like every Wednesday at the middle of the week. So it's Andrea here. I would like to brief you up with everything that's going on around this week. So far today, what is expected as well, and I'll do my best, obviously, to help you with any questions that you have. So allow me just to double check that you can see me, hear me, etc. And you can see everything myself. You can hear me as well here in our social media, but also for anyone that has joined me via the GoToWebinar meeting. So I'm just will repeat a bit, just to let you know that this is your session, as I keep saying. Okay, this is your session, so feel free to ask everything you want. It's live analysis, so I'm here to help with any fundamentals or technical questions that you might have. So just let me. Okay, I can see questions coming, or at least thumbs up. So, welcome, Prince. Welcome, Israel. Welcome, guys. So, for all the attendees in the GoToWebinar, you can hear me via that platform. Otherwise, you can shift to our social media if you prefer. I have already sent in the chat a YouTube link for you to join if you prefer to uh, use a different channel. So. Welcome everyone. Hello Michael. Hello Nicholas. Hello. So until you have any questions, I will try to be very quick. Okay. And I want to start obviously with euro dollar because we have seen the European data just earlier. So we had a pretty significant, I can say, downturn. I'm sure that you have already seen that move. A lot of alerts were kicked. So yeah, Eurozone's presented downturn in the PMIs. Obviously, it's a flash PMI, but flash PMIs are more important than the total one because the total number doesn't matter because it's something that it has already done. Flash is giving the preliminary, otherwise you might find it with the word preliminary. It's a clear indication on whether we have further disappointing numbers, further slow down, and etc. So we have seen the Eurozone's PMIs earlier. So let me just brief you up a bit. The composite means merging manufacturing and services. The composite reading actually blanked significantly. What I mean by blanked significantly, went back to the lowest level since November 2020. Okay, so it was a weaker than expected reading. Let me share with you the calendar as well. Why not? Give me a second. Just to refresh a bit and to explain, actually, not to refresh, to explain what today's numbers should mean for you and for all of us, actually. You need to know, guys, even though it's still August, we won't see central bankers meetings until mid 20th of September. However, all this data, along with Jackson Hole, along with all this upcoming data and the Jackson Hole, will give us hints on what the banks are expected to do next. Obviously, I'm afraid that the odds remain on the higher for longer stance, but all these data releases are helping further to confirm these scenarios. So, yeah, here I have it. Let me put it side by side with the euro dollar. So we had Germany initially, we had Eurozone later, and UK the very last reporting. So as you can see, all the readings all the readings, composite services, manufacturing PMIs, preliminary all, okay, from Germany, Eurozone, and UK, all under contraction, all under contraction. So, where are you? Let me double check. Okay, you can see it. Perfect. This is euro dollar. Euro dollar. This is euro dollar. Thank you for replying, Otto. Thank you for replying to Garung. So this is euro dollar. So, as I was saying, it came weaker than November 2020, but in general, everything is below 50. So it doesn't give any relief signals to the market participants. It just keep showing and persistently presenting a return back to contraction territory. As you can see, from services get back below 50. They were above 50. They were above construction level in July. The same stands for Germany as well. The services blanked. Okay, so it's not only the deterioration of the manufacturing sector, but you can see that services are also back into a contraction, even though they provided some kind of an improvement the last 2 months. But now in August, they returned back to below contraction. So this is guys, okay. It's like it's any kind of improvement that we have in the sentiment it's just now it has been completely ignored. Okay, we had if we focus if we let's focus over here on the Eurozone manufacturing PMIs. We can see that it improved. You see, right? From 42.7, 42.6 was the forecast. It came at 43.7. So we can see that there is the manufacturing sentiment presents some kind of a slight improvement. However, it was the only one, and it's still below 50, while all the rest presented a decline. So there's nothing, no improvement to be considered, no nothing like to support a bounce or an improvement in the sentiment. Okay, it's a clear downtrend, as I said. It's a clear deepening. Nonetheless, it's a clear deepening of the downturn, and it's presenting that weakness is stubbornly there, stubbornly high, the weakness, and this is something that we will see actually in the inflation later on. Okay, it's pretty much okay. I would like to have a conversation. Like I would like to ask you. So what that means about the policy, the ECB policy. Obviously, I cannot have a conversation in social media. I mean, live social media, but guys, this is just another sign that inflation could remain slightly stubbornly high, and this is another argument for the hawks of ECB to proceed with another to keep, actually not to proceed with another hike, but actually to keep the policy to keep the policy aggressive. So yeah. So obviously we have still Jackson Hole. So all the attention will be on Jackson Hole on Friday, because we're gonna see Miss Lagarde speaking, Powell speaking, and all the central bankers. So we're gonna have a clearer view, at least on what is expected to be done in September after the Jackson Hole. Jackson Hole will be key. Because again, over here, once again, even in Europe, not only in the US, we are facing a possible, it's the soft landing is something, the soft landing scenario is something that has been on the table for Europe as well. Okay, so we have seen ECB chief economist Lane actually mentioning a soft landing just last week. So these reports obviously just are not helping. They just add to the worries around the growth of the Eurozone. Um, um, but in the meantime, at least for September, these weak numbers might have increased the odds of a pause in tightening, at least for September. Banks remain data dependent, okay? So they might, both Fed actually and ECB, they might consider, at least this is what the odds are is showing so far based on the data, that they might pause in September before they proceed with another possible rate hike in November. So, like to wait a bit more, to see more upcoming data, not to take any action on September, okay? So, please, what is immediate sentiment for euro dollar? Okay, so let me just get rid of that for now at least. So, and I will zoom out a bit. So, I'm not sure whether you're referring to no, you're referring to euro dollar, not Eurozone in general. So, such, okay, I'm just gonna go down to the 30 minutes chart just to show you, because you mentioned immediate sentiment. Hopefully, my understanding on this question is correct. So I understand that you want to ask me what is, I mean, the sentiment currently in the euro dollar, whether we still have further pressure to the downside, further bearish buyers, so bearish buyers, or the sentiment is changing. So this is a 30 minutes. Sorry, I'm turning on the other side because I can see your questions on the right hand side. So, my dear friend Emmanuel, so this is the 30 minutes chart in euro dollar. Okay, as you can see, after the plug that we got on the announcement, we are seeing that the price action continues to move lower. However, the body of the candles, of the 30 minutes candles, are small and even dodgy. So that presents that at least in the very short time frame, there is the euro dollar has found an immediate floor. So for now, some consolidation has been observed. It might be a correction. It might be the need of a correction. So currently, we have seen some sideways move at 108 territory. Sideways move is a round number anyway, so that's quite reasonable. However, momentum, as you can see, I'm using the OSMA, otherwise known as oscillator moving average. Okay, so not sure how many of you are using OSMA. You can see, can you? Let me rearrange it a bit. Yeah, you can. You can see that the momentum is still well below zero, is still low. So, Emmanuel, just to help you a bit. For now, like in the last few minutes, there is a bit of a consolidation. There is not enough power, let's say, to break below 108. However, the overall momentum is negative. So this might be a correction before another attempt to the downside. Anyway, US Open has not, we have another 2 hours and a half until US market opens. So more volume will be added. Obviously, it's the most volatile time of the day is on the US Open. But yeah, now a bit of consultation before a potential breakdown. of 108. So if you see, my dear Emmanuel, the euro dollar finally breaking and moving below 108, then the next level, actually, the next support levels, let me just, okay, look at this beauty. If I had, if this morning I had put my Fibonacci extension on, I could be able to spot this this target level. Nonetheless, the next support level, if the asset managed to break the 108 and move below it, it would be another 25 pips lower, 0.10775. And let me go to higher time zones just to spot any potential support levels. Okay, nicely, this 10775 level that I just talked about is also a level that provided for few days resistance for euro dollar back in May. Okay, so momentum is still negative, a bit of a correction the last few minutes, a bit of a sideways movement. But as long as the asset doesn't turn back above the mid of this candle, so let me find the mid level of this move. It should be here. Yes, it should be here. 108.40. As long as we don't see the asset getting back above the 108.40 territory, then there is no reversal sign. Okay, no reversal sign. So actually, I'm gonna take this. So just I want you to. I'm trying to provide you two resistance levels. So the very first is at the top of this tail, 108.30. The very next one is the important 108.40 territory. But in general, guys, euro dollar has been in a downtrend since the mid of July. Eurozone's downturn deepens. There's nothing positive that could give some relief for euro against dollar. Okay, inflationary pressures are still on. Actually, the inflationary pressures continue to run far lower than seen over much of the past 2.5 years. I've seen this an S&P global survey, not a survey, sorry, research that Marco sent me earlier. So still, falling manufacturing prices, stubbornly inflationary pressures are still on. Um, uh, Price inflation up, wage pressures still on. There's nothing to give some relief to euro against dollar. This is what I'm trying to um, make you understand. Now, let me just double check your questions. Okay, we covered the technical analysis, at least the intraday one. Since I'm up to the daily chart, just to show you that the resistance area that I have shown you earlier, the 108.30, 108.40 territory, is a level that has provided a nice support to the euro dollar for 2 months. Broken, however, consecutive bearish candles, clear downtrend, and the medium term outlook for euro dollar remains negative, with the next levels to be seen at 107 or even 106 territory, which is an area that has been we have seen euro dollar back in May. So yeah, we have a bit of a, let me, okay, yes, MACD keeps detecting, so lower, clear downtrend. So it is what it is, right? So, uh, so this is the daily one, dear Hussein. This is the daily, okay? This is the daily, and the lines that I've put on are my support and resistance levels, okay? Anything you need, I'm here to help. In the intraday setup, as I showed earlier, I use my Fibonacci extension uh, with over here with the 100% Fibonacci extension being the next support level as soon as the asset breaks the 108. A potential rebound could find a strong resistance at 103, 1083, and 1084 territory. This is the yellow area that they've put on over here. However, you can see that the momentum is negatively configured, so no rebound is expected, just a correction, just a sideways movement before another attempt to the downside. That doesn't look to be the case, my dear Margana. There is nothing really to even give us a hint right now for a potential reversal. Okay, neither in the intraday setup, neither in the medium term setup. Okay, as I said, in order to have a clue or at least a hint for a potential reversal, we need to see euro dollar moving above 108.40 territory intraday. The daily chart is a different story. We need to see at least a move above 109.50. Okay. So gold, of course, gold. I've missed some questions. Sorry. Imer, I'm not sure what you're asking. You are asking me whether please can people chat to the live section. The live will remain will be saved in our social media, so it will be on YouTube, it will be on, it will stay on Facebook, LinkedIn, Twitter, etc. So if you cannot watch us live right now, don't worry, it will be saved anyway in our YouTube channel, and you can see it later on. So gold and dollar, obviously, dollar already fly, gold pair going down. Let's have a look. Yes. Okay. Before I turn to, let me just. Before I turn to gold, since you mentioned dollar index, this is the dollar index in the 1 hour chart. Okay. And we can see this sharp boost higher, breaking the first resistance on the day, breaching 103.85 level. Momentum is keep rising, even though RSI and stochastics, let me put my stochastic as well, they present the need of a correction because the asset is overbought. 1, 2, for 3 hours in the last 3 hours, dollar index has been overbought. So some consolidation might be seen in the next few minutes, just for the asset to get back to the Bollinger Band area. Because in every extreme condition needs a correction, right? So it's a bit overbought. So we might see further consolidation above 103.75 level. But overall, the asset remains to the upside. All moving averages are below the price, pointing higher. MACD rising, RSI rising. Nice uptrend in the daily time frame as well. Remains there is still further room to the upside for euro dollar. With as I said last week, with key ceiling and an area of attention to be the May's highs. So it doesn't look, your dollar index doesn't look like it's running out of steam. No, nonetheless, after a week of consolidation, it finally, let me zoom in a bit just for you to see. After a week of consolidation, it has managed today to exit this ranging area. Let me just have a price action template over here just to show you naked candles. Okay, look at that. I will zoom in. Look at that. This is a daily chart. Okay, just a quick reminder. This is a daily chart. After a week of consolidation and a ranging market, because last week it was more or less, and yesterday as well, it was more or less a ranging market, sideways. Doji candles unable to extend above 103 35 was it? Yeah, above 103.50 area. Unable to move below 102.80 level. So just consolidating for 1, 2, 3, 4, 5, 6 days in a row. Okay, and today it managed to exit this area, this sideways, this ranging market, and extend higher. So this is another indication that bulls are back in control, pushing dollar index higher with the ceiling to be the next resistance area, to be on the May's highs. So still 104, even 104.50 level um, are significantly important for dollar index. So here we are. Yep. Gold, you mentioned gold. Just before I move on to gold, um, so we might didn't have data of US so far today, but this weakness that we have seen from Europe, weighted on Europe, weighted on sterling, and it seems that it has boosted some safe haven flows into the dollar. Okay. Um, what else I wanted to mention? So dollar is benefiting mainly by the weakness that eurozone presents, and the weakness in UK as well, because we had UK PMIs as well, still contracting. I showed it earlier, still contracting. Services down below 50. Manufacturing below, I mean, decline as well. Composite decline. So dollar is benefiting because there is a comparison right now on the manufacturing sector and service sector in UK, in Europe and US. So there's a comparison. So these weak data from Europe and UK are giving a boost in dollar. It mainly has to do with the US safe haven flows, possibly also ahead of the Jackson Hole. But yeah, it is what it is. Uh, Ivy, there is no handout. This is a live analysis, so feel free to ask me anything you want. What is the difference between intraday and interday time frame? No, no, intraday. No, intraday. When I'm saying intraday, Patrick, I'm referring to any time frame that is within the day. So 4-hour chart, 1-hour chart, 30 minutes chart, 15 minutes chart, so less than, not a daily, not a day trading, intraday trading. So if you're a scalper, let's say, and you're trading for a 30 minutes chart, you consider to be also intraday trader. Yes, so that you place your trades, okay, in the short term, based on intraday analysis. Unless if I understood your question wrongly, but yeah, this is it. What else? Let me take a breath. Um, okay, before I go to gold, so um, today's bottom, guys, keep an eye, put your lines on, put some support and resistance levels on, but today's bottom remains the immediate support for dollar. So if I go back, this is the 1 hour chart, okay? 1 hour chart. So this is the day's floor, remains a key support level, and 103.60. So on the upside, 104.20 and 104.50 key resistance levels. So while on the flip side, 103.60 and 103.26 are the immediate support levels. What that's supposed to mean, this is the 1 hour chart, by the way. What that's supposed to mean is it means that, as I said earlier, dollar is overbought right now. It's overbought. There will be, or we might see the need of a correction, like the one that we have seen here. So after a sharp boost, there was a bit of a correction. Okay, so in the case that we see a correction because it's overbought, the floor that will provide support, it will be the 106, 103.60 before another attempt to the upside. Okay. Uh, but yeah, our trend remains intact. Look at this beauty. Even if I put a channel on, look at that. Actually, let me just correct it a bit. Yeah, that's much better. Now, actually, I need something even more better than that. Let me. Okay. Okay. I'll keep this on. Let me put it with yellow so you can will be visible. It doesn't satisfy perfectly my channel, but it's giving me this yellow line is giving me a support, okay, support area. So the area between this yellow line and my green line is a key support area, because a move below the lower yellow line means that we could see the asset turning and retesting the green line. But as long as the green line remains intact and the asset is not moving below it, then that means that our up channel is still on. So that's just calling for another boost to the upside, another boost to the upside, another boost to the upside, and so on and so forth. So, gold. I will start with a 4 hour chart. Okay. And the reason for that is because I want to analyze a bit this rebound. So gold has been to the downside for many months now. We had a nice smooth channel to the downside since the end of July. Oh, let me just, yeah, nice. So we were in a smooth, nice downtrend for more than a month. However, as I said last week, I think I said it, yeah, a break of the channel to the upside could give you a hint that reversal is nearby. And this is indeed what happened. Cross and broken and close above the channel. I will get rid of the bands for now. Move above outside the banner, the channel. So that was the very first hint for any one of you that if you spotted that, okay, that was a very first hint that we might have a nice rebound. Three consolidated, because these three doji candles followed, but that's not negative. That means that, okay, it's holding gains. Nice. Another boost higher, retesting the 50 period moving average. Okay, so that was a key resistance area, not broken. So we had a big sell-off. However, still, gold remained outside and above the channel, and instead is keep holding more than a week's gains, hovering around 50 period moving average. Okay, so and actually this is in line with the rising RSI as well. So is this a reversal or not? I'll tell you. Just I'm gathering. I'm doing analysis right now, so I'm trying to see what will happen, what is going on. The fact is that we are outside the channel, holding gains for more than a week, rising RSI, and flirting with the 50 period moving average in the 4-hour chart. Now, I will go further down to the 1-hour chart just to see what's going on. What's going on? What I can see from the 1-hour chart, okay, is still consolidation for 1, 2, 3, 4, 5, 6, 7, 8 hours in a row, and a failure to break this a failure to extend higher. This is an area that has been retested also yesterday, but the asset didn't manage to break and move above it. Instead, it turned down. Today, it recovered all the losses, retesting that area again, but still failing to break it. So what I'm trying to tell you guys is that gold supported very, very strongly by bulls, but in order to trigger some long positions, we need to see it breaking yesterday's and today's highs at 109.05 level. So, can you see my fractals? Can you see my fractals? I'm good, Ali. I'm good. I'm great. Thank you for asking. Thank you. Hello, Adnan. Hello, my colleague, and as a colleague of mine, market analyst as well. Welcome. Who is confused? Precious. Have I confused you? Let me know right now. I will help. Okay. If I have confused you, let me know. Let me know, and I will clarify everything. A lot of questions. A lot of questions. Okay. So, gold traders. Gold traders, focus on me. Focus on me, please. So, can you see my fractals over here? Oh, so this is yesterday's highs. This is today's highs. Still unable to break it, unable to extend and post a new high. That's why I have put this line on, which is at 106, 1906.38, is slightly above my fractal, latest fractal, because as soon as I see gold breaching and breaking that level, that will mean that bulls are back in control and they are ready um, post another high for gold. So gold, despite the strong dollar, it has appreciated as well. Usually, we have a strong dollar, we have a weak gold. But in this case, we have a strong dollar, but we also have a strong gold. This is because all this weakness that we have seen from Europe, from UK, but also this Chinese uncertainty, the deflation worries, has boosted, as I said earlier, safe havens. That's why dollar benefit, that's why gold benefit, and that's why we have seen some significant moves on USD yen as well. But let's leave yen for now. So I want you to focus a bit on me. Gold. Use your fractals or your swing highs. Place a line slightly above it, okay? At 109, 1906, round number. And move, a breakout and a move above 1906 today will mean further safe haven flows for gold. So further appreciation of gold, further move to the upside, okay? With the next resistance areas at, let me find them for you, at 108, 1908, 1910, 1911. So it's I'm using my previous swing highs to identify the next resistance area as soon as the asset breaks the 1906 level. You can see we have rising RSI. We have the asset holding gains. So if I see 1906 being broken, that could open the doors to last week's highs. Now, I will go back to the 1 hour chart. Okay, I will like to put a Fibonacci over here on this swing up, swing down, just to confirm. This is something that can be used by 30 minutes trader or 15 minutes trader. If you are like a scalper, like 15 minutes, 5 minutes, 30 minutes, use these Fibonacci extensions to find immediate support and resistance levels. So this is a 30 minutes chart. This is a 15 minutes chart. Let me get rid of. So you see, for 15 minutes trader, 1905 is the next resistance area, and if it breaks, the very next one is the 1907. Okay, so depends what kind of time frame you are trading. So I'm saying all these and use them, but adjust them based on your strategy, on your time frame, on the way that you're trading, and so on and so forth. And yeah. So on the flip side now, support remains at the 1900s, and the, where is it? Okay. Yeah. Immediate support, so support remains at 1900s, key psychological level. Okay, this is the intraday support. And for any one of you, if there is any one of you guys that is a day trader, medium trend trader, etc., if the asset turns below 1900s and it keeps moving lower and lower and lower, it, support then falls to 1888. That will mean a potential return back to the downtrend. But this is a scenario that is not anywhere nearby, so don't think about that. Okay, I have too many lines on. Just let me know if you're confused or anything, and I will try to sum this up once again. How about me? I'm not sure. I haven't seen. I might have missed your question there. Joshua, I haven't seen any question. If there is any, please let me know. Great track center. Thank you for asking, guys. If you're still struggling with my live analysis for gold, let me know and I will repeat everything, because I know that the most of you are, I don't know, I think you love gold. So I will try to do it again. And since you mentioned yields, Hossein, yeah, that's an excellent question. Excellent question. Of course, there is a correlation, and a very strong one. Okay, a very, very strong one. If we see yields corrected sharp, so we have a strong pullback on yields, right? Gilt yields, so the UK yields are down, European yields, the 10-year bond is down, US yields are down, 10-year one, 30-year one. Yes, there is a correlation. Pressure on yields means boost on gold. They have an inverse correlation. The lower the yields, the higher the gold. This is what this is what theory said, and this is because if we see yields down, okay, drifting, then the gold is considered to be a more attractive investment than yields. So the lower the yields, the higher the gold. The higher the yields, the more attractive investment is. So the lower the gold. It's a negative correlation. So they are moving on the opposite directions. Okay. Oh, what else? What else? Questions. Yes. Yes, Hossein. This momentum is strong. There is a lot of steam to the upside. We could say that an immediate ceiling it could be the 104.20, but yeah, there is a lot of support. That we might see some pressure based on what will happen with Jackson Hole. So Jackson Hole could shake a bit the dollar. Because all the attention is on the Jackson Hole just to bring us some clarity. So that might intraday in the short term add some pressure, but that's still we wait to see for that. Currently, what we are seeing, so trade what you see, not what you think. So what we see right now is a lot of support. Okay, and I will put my intraday setup as well. A lot of support It was overbought, so that's why we might see a bit of a consolidation, but still bulls are in control. Boom. Moving averages all point higher, right? Consecutive bullish candles, rising MACD, rising RSI, another. So stochastic overbought. Yeah. So hello, welcome, welcome Jackie, welcome. We've seen gold. Let me get back to gold. Hello, hello, Precious. Hello, Lunku. Nabi, I think you're referring to my trend lines in dollar, which I had a channel. Not sure. Sorry, I missed your. I missed your. I don't know which ones where we left it. Yes, good, well spotted, Hidayat. We have dollar news today. Today, actually, in third. No, we still nearly have 2 hours ahead of us. Is retail is PMIs. So yeah, retail sales from Canada in 30 minutes, and we still have another 2 hours until the retail sales later on from US. Da. Let me just scan through your questions. What is expected? Okay, get back to the questions. We have news later on. How will affect the technical analysis? Great question, Hidayat. So, yes, well spotted. We have retail sales actually, and let me just. Okay, sorry, no, not retail sales. Sorry, retail sales is from Canada. PMIs from US. So, just, whew. Okay. So PMIs, what we're seeing over here. So services, we're at 452.3, expected to remain in line, 52.2, unchanged composite, manufacturing still below 50 in a contraction, but to show, they expected to show a slight improvement, a very, very tiny improvement. Can you see that? From 49 to go at 49.3. Sorry for that. Just a second. So, um, so still we're okay. Obviously, we don't know how this will be released, but the services in US they have presented a bit of a recovery, tiny but still a recovery. While the manufacturing sector is the one that's struggling the most, and this is unfortunately worldwide, as we have already seen. So, if my dear friend Hidayat, if we see the releases, the numbers coming below expectations, that could pressure dollar, that could boost dollar lower. We could have a selling of dollar if it missed the forecast, and if we see the services, the composite, the manufacturing below these readings before below these forecasts, because this will mean, similarly to Eurozone and UK, it will mean another deepening and deep downtrend. It will mean that any progress that we have seen in services, it has eliminated. So that's the negative scenario. If, however, we see them coming in line with expectations, or even a slight improvement, that would be even more beneficiary for dollar than we have already seen. Okay, because it's giving this difference, this the difference that we've seen between these three economies. What else? What else? What else? So keep an eye on the data later on, because they're very important. Very important. Um, yeah, if we beat expectations, that would be positive for dollar. But if we see a surprise like what we have seen in Europe, in Germany, UK, that would be a very pessimistic and disappointing release, and that could turn dollar down to 103.50 or even lower, my friend, even lower. By the way, guys, you can disagree with me, right? This is just how I'm trying to explain the data. I'm trying to explain what they mean, how they could affect. Some of you might just feel free to share your thoughts with us, to have a nice and healthy interaction, right? It's still base candle weekly. It can be sideways all the week though, which is nice for scalpers. Yes, scalping is anyway very short term, so scalpers can benefit in a ranging market, because any move at the bottom means it could mean a rebound to the top, and any movement at the top could mean a reversal to the downside in a ranging market. Sideways means a ranging market. It's not very sure. The data are still 2 hours ahead of us. Is the Canadian retail sales that are in 20 minutes, 30 minutes, which is nice for scalpers. No, you're referring to gold, I think, right? No, market roadmap. What's your comment about which asset? Oh my God, I have a lot of questions. Okay, let me. We're gonna cover again gold. Don't worry. Yes, we have already said how it could affect. Mm, that's not necessarily bad, my dear Ali. No, that's not necessarily bad. I can see that there are a lot of interesting signals out there. I don't know where you exactly see the sideways movement, except from 1 hour chart in gold, but uh, uh, but there are still, for you to have a very, how can I say that, to have a view of what's going on, it's good to also check. So it's good for you guys, before you take any decision. Let's assume that we have gold, right? Before you decide what you will do, whether you will participate or not, whether you are open a trade or not, it's good for you to always check the overall trend and go lower. So what I mean, quickly, what's going on? Where my gold is? Okay, I had let me just, three negative, sharp negative weeks. It bring me to that bottom, a floor that has been seen again in May. So I can see that is at an important support level, okay? And I can see that is in a decline, is in a descending triangle. Descending triangle. So I can say that, okay. Weekly descending triangle, but still at key support level. Now I go down to the daily chart. So I can see that I had a very sharp sell-off for more than a month, but the last 3 days I have a rebound, right? Rebound. But still, this rebound, if I put my Fibonacci, is below the 23.6 Fibonacci level. So, okay, it's something to add in my watch list. That gold is below 23.6 Fibonacci level. So I don't have a reversal signal in the medium term. Medium term means daily, weekly. Okay, so I don't have a reversal. I will have a confirmation of a reversal if I see gold breaking and moving above the 23.6 level. Now I go even lower. So let me clear a bit this mess. Delete some the Fibonacci. Now I go to the 4-hour chart. And here I spot, okay, nice strong resistance. It used to be a resistance back in last week. It was resistance yesterday and remains a resistance today. So there was 1, 2, 3 attempts from gold to break this area, to move above this area, and so far they have failed. So I move further down to the 1-hour chart because I want to see what's going on. Okay, what's going on? 1, 2, 3, 4, 5, 6, 7, 8 hours in a row trying to break yesterday's and today's highs. So that's give you clues. That give you clues that, okay, you need to keep monitoring because as soon as it breaks this up fractal, it will mean that bulls are back in play and ready to boost the gold even higher at 1908, 1911, and etc. So this is what you should do. Go from the high to the low, update your watch list, put on important levels that you have spotted from your analysis before you take the decision to enter a trade. Okay? So, my friends, keep an eye on gold. I keep saying that for, I don't know, for the last half an hour. This top is a key resistance level. And if it breaks, it will open the doors to 109, 1908, 1911, and even higher. Let me zoom out. And yes, for now, a break of the latest up fractal, the break of today's high could open the doors to 109, 1908 area, 1908.50 area, and even to breach last week's 15th of August highs at 1911. Okay. No. I'm Monk. I disagree with you. Yes, dollar it is strong. Yes, indeed. But today we are seeing that both as safe havens they benefit. So dollar is up today, but the same stands for gold as well. Gold is not down. I cannot see down. I can see sideways, but holding the gains that it had since last week. So it's not going down. They are both safe havens. They both benefited because yields are down. And regardless if dollar is strong, we still that there is a very strong support in gold as well because yields are down and because all the weakness that we have in Europe, in UK, and the uncertainty around China supports gold. Okay, so let's move on to some final questions. Uh, what do you think about silver, Ali? Same, following gold. I mean, even a greater, a bigger mover than gold. We have seen spike in 20 to 23. That's, let me put the 1 hour chart, okay, or the 4 hour chart just to zoom in a bit. We have seen that it opened today at 23.37, and it broke all the resistance of the day, all the resistances of the day, and it breached 23.85. So around 50, yeah, 50, yeah. So rebounded, broken 200-day moving average, broken 20-day moving average, broken 50-day moving average, and we have a confirmed reversal signal from silver. It already recovered more than 50% of the down leg that we have seen since July. So the next levels to be watched for silver will be the 2410 area, 2410, and if that breaks, then the next area to be watched will be the 2465. Okay, so bullish outlook for silver. This is a long distance, dear Hossein. This requires, so you're referring to a move here, somewhere here, okay? That's a long way. That's a long way. In order to something like that to happen, okay, we need to see the asset turning above 1920. Okay, or we need at least a break of 200-day moving average, something that didn't happen yet. Okay, you just see, we need, no, we definitely need this, we need this area to break, and not only that, yeah, so it's far away. As long as it remains below 23.6, we cannot see a retest of 1935. 1935 requires consecutive bullish candles, strong decisive bullish candles, and definitely a move and a break above 1915 and 1920 area. Okay. That's up to you, Medallo. That's up to you. I cannot tell you what to do. I try to help you with gold. I try to help you with dollar. My only, let's say, advice is to trade what you see and not what you think. Okay? Trade what you see, not what you think. Oh, sorry, Adnan. Adnan, so sorry, I did that earlier. So in regards to you're referring to the service sector in US, or so if you referring to the service sector, the ones that already published in Europe. I'm not sure what you're asking actually. Let me just check whether you have. Please throw some light on the client service sector. Are you referring to the upcoming? So if you okay, let's take step by step. Okay, so where is my? I'm not sure for which country you're referring to, but uh, okay, I'm running a bit out of steam. Sorry for that. Okay, service sector in Europe and in the UK, as you have seen, they have deteriorated, as we said earlier. Okay, so I will say it one more time. Okay, so so this is not a surprise because if we consider that there are high wages still, okay, this is the most common factor leading to rising costs, especially in the service sector. So one factor for the deterioration of services is the fact that we're still having high wages. Okay, adding to the living to higher uh, input costs, and that's why we've seen this decline in services. Um, Now, also demand on services has dropped, something that also presented with these declines over here, right? So it's not only manufacturing; it's the services activity as well. So demand for services dip as well. Um, what else? What else? What else? What else? So, and that is this weakness will help to keep a little stubbornly high services price inflation. That's why I said earlier that this is adding to the arguments against another rate hike, at least for September. Okay, at least for September. Now, now. What else? Let me go through your questions for one more time before I call it a date. Edmond, I'm afraid that even if you say so, it doesn't mean that people and market participants will respond, right? So I can see what you're doing. I can see what you're doing. Just be patient. Be patient. Monitor and uh, just based on what you see. I will say it one more time. Based your decision on what you see, not what you want to be done, okay, or not what you wish it should happen, okay. There is I cannot see any pressure to the downside, Ferries, in the short term at least. Um, if the US PMIs surprise us negatively today, actually gold could find further safe haven support. But until then, we need to base on the technicals. Okay, remains in a range, So keep an eye on the range. Simple as that. Rely on your support and resistance levels. Be patient. If you are referring, Mr. Ferris, on the overall outlook, yes, the um, we might we as soon as for the time being it remains in a negative momentum overall because we don't have a substantial rebound. Okay, we don't have a reversal, still at the bottom of 2023 territory. So overall we consider that we can say that gold is at the lowest that it has ever been for the last 5 months. So yeah, it hasn't recovered significantly. Okay. No, no, no. What else? Yes, we still have time. Evening star. Let me check it one. Let me check. Where are you seeing this evening star in the 1 hour chart? Why I cannot see it? Evening star? What is the evening star? In the 1 hour chart, you said. Gold evening star, 1 hour chart. I cannot see, I'm afraid, an evening star formation. No, I cannot. I'm afraid. I'm sorry. I cannot see that. I cannot see that. No. If you're referring to this one, it's done. It's over. Pull back. Right now, I can see only consolidation. Nothing else. With eyes here and eyes here. Boop. Okay. Uh, Euro had a very, very sharp decline so far today. I explained that several times, but still, as I have started my life with the euro dollar. However, this still the 108 level still holds, my dear Napothe. So as long as 108 holds, the asset remains sideways, as you can see. Once and if we see, considering the bearish momentum is still on, bears are in control. So bears are in control. However, we have for 3 hours in a row consolidation. So a break and a move below 108 could open the doors to 107.75. Okay. Tackle for me, dollar Swiss. This is the very last question, and I will call it a date afterwards. So let's go back to another safe haven, which is dollar Swiss. As I said, the in general safe havens have seen a boost today. So you're very welcome, Mr. Ferris. Dollar Swiss 1 hour chart. Dollar Swiss, it was consolidating the whole day yesterday and overnight. Then on the European Open, it broken it exit the range and it moved higher. Okay, so not very exciting. Very exciting, I'm afraid. Let me use my intraday setup, Napothe. Hmm. Not a very exciting cross for a 1 hour chart for intraday analysis, Napothe. Why I'm saying that? That because, okay, indeed, it exited this range. However, can you see this? Let me just get rid of some analysis. Okay. Can you see all these long tails here, here, here? This shows indecision. Indecision. Small body candles and long tails in both directions sometimes. Pretty flat RSI, flat MACD, flat RSI. Stochastic is flattened and it's overbought. Intraday, there's a lot of indecision. Sideline dollar Swiss. If I move on to the daily chart, still remains on the same area that it has seen for 1, 2, 3, 4, 5, 6, 7 days in a row. Let me just okay. Ceiling sideways. Sideline Nabote, I'm sorry, I don't know how to help you further, but it's not exciting. Sideways, flat for 2 weeks in a row. Key resistance at 0.8827. Thank you too. Thank you, Edmond. Thank you, Faris. Edmond, you hopefully you do, because if you do it, then it's on your benefit. But I say, as I mentioned that because you sorry, I actually misinterpreted your comment. You mentioned no, yes, you mentioned no. I didn't misinterpret it. You said take profit at 1902 and 1900 for scalping. Oh, come on. You're very welcome, guys. You made me laugh, Edmond. But I'm glad for you, dear. I'm glad. Dollar yen. Yeah. Oh. A tricky one, right? Look at that. No one asked me about oil. No one asked me about pound. Look at this. This is the pound daily candle. Huge sell-off today. Look at this. Boom. Sell-off. Literally a free fall. Free fall. No one asked me about pound. Only just now. So pound yen. Free fall. Yeah, so this is pound yen daily chart. Okay, very interesting actually, because we can see just in a single day, a reversal of more than 50% on this latest boost higher. Very big bearish candle, guys. That opens the doors to 183 area. Obviously, everything depends on how this candle will perform and will close today. But that was a huge sell-off, right? It's adding to the possibility of a reversal. So, if I go back down to the 4-hour chart, you can see that the upwards channel has broken this morning. 2 consecutive huge bearish candle, opening the door to 61.8 Fibonacci level, which was also a key resistance area in the end of July. So this is pretty much the next floor to be seen, which if it brokens, it opens the door to 181.65 level. They are huge bearish candles. So sellers are in control. It's like a free fall for now. Now I'll move on to the 1-hour chart just to see that whether there is still further steam to the downside. And as far as I can see, you see, 1, 2, huge bearish candle. 1, 2, 3, 4, doji one, and now Okay, we have another 30 minutes until this candle close, but you know what? I'll put the 30 minutes chart just to see. Okay, there is some consolidation, but yeah, sellers are in control. Sellers are just in control. So if this candle holds below 10, if it close at 18350 level, then it's like calling for further sellers, attracting further sellers. That's something that I will monitor again tomorrow because I want to see how this candle will close. But that's a very good call, Jasper. Free fall, free fall. So whether it run out of steam or not, not. You need a bit of a correction. And if I put my technical level, technical indicators on, I can see it. Yes, it needs just a bit of a correction. But this, yeah, we have a bearish cross between 50 and 200, moving average, I keep pointing lower, volume just expanding lower, momentum is down. Yeah, these three, the last three sessions, there is a bit of a consolidation, but that's just the need of a correction before another attempt to the downside, just very, okay? Guys, I will call it a date. I am more than an hour, I'm nearly 1 hour and a half, 30 minutes live. Hopefully this session helped you. So take care. We have the PMIs later on. So yeah, take care. I'll see you again. We're gonna keep posting. We have a QA actually, question and answer Instagram tomorrow. So join us. Yeah.
It's open. The video is open. Now, the 10 minutes.
Oh, in 10 minutes.
No,
Yeah.
no, no.
Sorry.
But 10 minutes that I will do about the US Open.
So perfect. Thank you. I will close the session, but Marco will have a US market open live. Just 10 minutes, a briefing. What happens in the US market open? So join him, okay? So he will be live for US market open, okay? Thank you guys. I'm running out of steam. Take care and join Marco later on. Okay. Thank you. Bye bye.